Oh, hi everyone, and welcome to this afternoon's webinar. Apologies, we were just sorting ourselves out. And also, can I just say before we start, if we suddenly disappear and go off air, we did have, we've been having some power failures because of the extreme weather that we're having down here in Hampshire. We've got sort of electrical storms on at the moment, and it happened on Tuesday and Wednesday. We managed to do the webinar on Tuesday. That was okay, but if we do suddenly cut out, that's the reason why. So anyway, thanks so much for coming along today. Spend some of your valuable time with us being myself, Anna, and David, my husband, who is sitting behind me actually. But before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And as always, just very quickly, we're going to be looking at some charts. We're going to be looking at the indices. I've got some really nice volume price analysis lessons. Volume price analysis, as I know many of you who come along will know, it's the methodology that we use to determine whether the price action that we see on the chart is valid or not, or are we see, is it a genuine move or is it a fake move? But what VPA also does, it gives us a number of signals as the price action is developing. We read the price action and the volume simultaneously, but VPA is actually, there are 5 elements to VPA. Those of you who are on our program, our forex program, will know this, will understand this and know this in more detail. In as much that it involves candles, candle patterns, support and resistance is hugely important. Levels, key levels on the chart, but also time, and not just the time of the chart that you are looking to trade, but also multiple time frames. And I have some really nice lessons today for you, really prompted by a question that came to me via my Twitter feed from a trader who is in India, trades the Indian markets, has bought the books, this book, and also the companion book, where there are actually worked examples of the methodology in different time frames and drawn from, this is has the stock market, it's got indices, and it's got some commodities. There is a version also for the forex market, but basically he's been in touch with me before, and he's just sent me, he usually sends me a couple of screenshots on Twitter, and just asks very quickly, what, is he on the right track with regard to his understanding of volume price analysis. And in fact, it really, I couldn't believe this, it actually coincided with the price action that I was following this morning on the pound yen, and it in fact even involved the very same candle that I was going to talk about today, which is actually the shooting star candle. And I've got the 5-minute chart here of the shooting star, which I want to talk through, as I said, about how what happens when you see one of these very strong signals that appear on your chart. Because a question that we get asked all the time is about VPA. So, well, when can I get in? And it's not as straight, it's not a binary question, it's not it's not a yes or no answer. There's an awful lot around entries, and it depends also on what kind of trader you are, how much risk you want to take on a particular signal. A shooting star, hammer, bullish engulfing candles, 2-bar reversals. The clue is in the 2-bar reversal. They signal that a reversal is potentially going to happen. So you as a trader, are you going to go off one one signal? What are you going to wait for as possibly confirmation? You've obviously got the volume to look at, but you've also got to look at that candle in context of what has gone before, what is going, what is happening as the price action develops, particularly if you're on a faster chart, because you're going to see that much more quickly. And then you've also got to put that in the context of maybe a higher, slower time frame, and has that candle reached a significant support and resistance level, a key level. Now, at the moment, we're not looking at order flow. It's something we will be doing later on. Has it hit a resistance because of maybe something that is happening, as I said, on the institutional side, which is where order flow comes in. At the moment, we don't know, because as I said, I haven't got order flow up, but it's something we will be doing, particularly when we have TradeStation up. So that's what I'm going to do. David, I think, have you got the NASDAQ to do today? Yep, David is going to look particularly at the very fast charts using Renko and time charts as well. But I think the best thing how I can start is actually I've taken a screenshot. Obviously, I've taken away the person's name. All you can see here, all I can see here is State Bank. I think it's like me, but essentially, he sent me this screenshot, and the question he asked was, he had very kindly marked up this candle, and the question was, is this a shooting star because of the heavy volume that is underneath the candle, as you can see here? Now, strictly speaking, it is not a shooting star, in the sense that a shooting star or upthrust candle, like its reverse, the opposite candle at the bottom of a trend, should be sitting right at the top, as we can see here. We can see here, this is on the 10-minute, and if you look on the 5-minute, it's actually much more demonstrative, as you can see here. What you want to see is the price go up, then come down and close pretty close to where the candle originally opened. Now, that doesn't invalidate this signal. What this signal is telling you, with that kind of a volume underneath it, is that there is clearly weakness that has come in at this particular level. If you look back, as I said about context, you can see here where we had this particular, I think it's a stock, has had a huge run higher with a lot of volume going into the up candles. Then it's had a reversal, a pause. You've got a big down candle with a reasonable amount. Where is that one there? If I can put it up here. Then you have some more buying coming in, and you have consolidation, which often happens when you see candles, strong candles, such as shooting stars and hammers. The temptation as a trader is, when you see a strong candle, perhaps not so much this one, because as I said, it's not strictly a shooting star, is when you see a candle like that, you should say, oh, great, jump in straight away. It's what David and I used to do when we first started, because that candle, it can lead to a dramatic reversal, as we see here. When you see it to the bottom, it can lead to a dramatic V-shaped reversal, obviously going up the other way. On the 5-minute chart, it really does depend. You see this signal, shall I take it? Well, the decision you have to decide is, how aggressive do you want to be? There are traders who will say, yeah, I'm confident, I know that, I've looked at the volume, I can see it's not going to go any higher. In fact, on the pound yen, it came off, it touched a level of, it was the high of June earlier this year. Sorry, I'm looking at something completely different here. Right, taking the signal as a more aggressive trader is perfectly fine if that suits your trading style. If it doesn't suit your trading style, then you have to be a little bit more conservative and wait to see how the signal plays out. Now, how it played out on the 5-minute chart, we have it here. Yes, there was an opportunity, if you like, for a few pips, a few points, if you like. But if you look at it in the context of the 10-minute chart, what actually happened is you have this, let me put my thing up. There we are, the pointer here. You have a very widespread up candle with a reasonable amount of volume underneath it, but you know, a widespread. But even that of itself is a sort of vaguely anomalous, because you've got a very wide spread, and yes, you've got a lot of volume, but not a huge amount of, you know, not massive, it's not extreme. Then you have this candle, which is a candle of weakness. As I said before, we know it's weakness because it has a wick to the top of the candle, and it has exactly the same volume as the previous candle. So we know at best, we are expecting a reversal. So you see that. Also, it is at the top of a trend, which is what I said earlier. A true shooting star, I would have said close nearer to the open and possibly even more volume under there. That would make it an even stronger signal. But if you as a trader are happy with that, and you say, no, I think I'm happy with that, it's had this long run higher, it's hit, as I said, it was a resistance that goes back to it's the high of June earlier this year. What do you do? But even as an aggressive trader, the way you can play it is you can say, well, you can test it. You can say, well, I'm not going to go in on a big size. You adjust your position size. So you say, okay, I'm going to test it. Maybe I'm going to put maybe one contract on and see how that plays out. Because when you have signals such as this and other signals as well, regardless of whether you're more conservative or aggressive, the way you manage them, the way you approach them is basically through the amount of money that you are willing to risk and put on the table. And you know, when it is perhaps, as I said, you're going to be on the more aggressive end of the spectrum, you can mitigate, if you like, your risk by putting a very small amount on, see how it goes, and if it then you know, plays out, you can then add to it. But what tends to happen with signals in all time frames is you have to give them time to develop, and this is what happened with the 10-minute chart, and also obviously on the 5-minute chart. The market, the instrument, will go into a sideways consolidation. Excuse me. And it's in this consolidation that you then have to look at the individual candles and the individual and the volume bars. Now, it went into consolidation not because it, you know, for you know, a reason that, you know, the traders have suddenly got fed up with the move higher. In the forex market, we have to be very aware of the session crossovers, and that is the move higher started well here at about 9:30 and carried on higher. Then we get this sign of weakness. You know, that was the end of this move higher. It looked like a reversal, but in fact it went into sideways, and it goes into this time period, which was at midday up to the start of the US session, and that often happens. So consolidation can happen after a strong signal because of the time of day that the signal is triggered. These are 24-hour markets, but they don't operate in a, you know, they're not uniform. You know, it's not the market doesn't produce, you know, there isn't the same level of activity. During that 24-hour period, you will have a period when, you know, there is a lull, and certainly around 12:30, 1 o'clock, you're actually coming up to lunchtime here in London as well. So, you know, traders are like us. It's lunchtime. Oh, right, okay, that's it. I'm going to close out. You know, nothing's going to happen. I'm going to wait to see what happens in the US session. But to go back to my trader in India, what he also wrote to me and said that what he's found with the VPA signals is that he uses ratios. He likes to know his risk and, if you like, determine his reward. He was saying he was a 2-to-1. Now, those of you who come along here regularly will know David and I have quite strong views about that, but I'm just setting that aside at the moment. He feels happier with that. He knows his risk is, and he fixes his reward. It kind of goes against the whole premise of trading, because with trading, yes, you have to know what your risk is, but you really want to keep your reward as open-ended as possible to maximize what the market may or may not deliver. But at least I feel with him, what he said to me is that by understanding volume price analysis and being able to read the charts using volume price analysis, he's actually moved it to 4-to-1. So he's absolutely delighted, but also by using multiple time frames, which has also helped him, because with what multiple time frames do, particularly when you have levels on your chart, however you mark your levels, it tells you where the price is likely to be going and where it is going to be pausing. And for this particular pair, if we go back on the daily chart, hopefully it will come up in a second. It's not, seems to be causing me a bit of issue at the moment. In fact, I went up to the weekly. Here we are on the weekly. This is going out some. I've got 142 for this particular pair. Let's see. Sometimes no, it's not cooperating at the moment. Our internet is a little bit flaky at the moment. Here we are. In fact, getting back to the daily chart, the other reason that it stopped where it did is because it was just beyond this R6, which on the Camarilla is like the R4. This is the furthest significant level, and in fact it didn't manage to get through. We've got the weak candle coming in here on the 10-minute chart, and in fact it's consolidating around this level, which is another reason I said consolidation, time of day, session crossovers, but markets will also consolidate around significant levels. Those of you who come along will know we use the Camarilla. So it's been going, as I said, going sideways. We've had a number of attempts to rise. We had a nice candle under here with a reasonable amount of volume, but the next one again we had weakness come into it. We had an engulfing candle here, which managed to take the price back up, but again couldn't really take out the high of that original signal. And in fact, it really hasn't been until it came back down to the R5 and it's broken through and gone back to another significant level, which is the R4, and is now going sideways again. And I'm just going to finish on this one with the Renko version of the price action that we have seen on the pound yen. By the way, if you want to catch up on my earlier analysis on the pound yen, if you head over to my Learn Forex page, here we are, hold on a minute, there we are. This is what I actually wrote originally when that first, that's a Renko version, that's the wrong one, there we are. That's what I wrote originally, there we are. And it explains, what I saw at the time, and I actually said that what is more likely to happen after such signals is that it actually goes into congestion. Right, question Renko. The great thing about the Renko chart is that it takes away all the wicks that we see on the candles. It smooths everything out. Now, a genuine Renko chart should not have any wicks to the top or the bottom of the candle. It is not a Renko chart. It may show a wick as the brick is developing, particularly if it is volatile, but a Renko chart, all it does, one of these little bricks will only complete once a preset number of pips goes through the market. This one is actually set at 4 pips. So this is the move higher that we saw on the equivalent of the 10-minute chart. This is where the, if you like, that weak candle came in, that up thrust candle came in. This is the pullback, and these are the attempts to move higher. But essentially, this is the consolidation that the chart went into. We can see the R6 is the level where it is basically attempted to break away from the R6. On the Camarilla levels, the R4 and particularly the R6, a clean break, a definitive break is seen, you know, away from this level, and you know, it's a genuine break. But as often happens, price will come back to retest it. It will simply oscillate around this level until something happens, and you will get a break low. We had a break lower, attempted to rise again, and again it's really consolidating. This time we have a strong support now platform here at 39.77, say, but it's also supported by the R4 as well. So yeah, it did actually break lower, but it didn't go very far. Why? Because it's bang on the R4, as we see here again. So the 4th, the 6th, I mean, all these levels are important. You know, price, and this is where you can perhaps not become more discretionary about your potential price objective. Rather than set a fixed ratio, you say, well, I only want 20 points, or I only want 10 points. The levels will tell you where this pair, in this case, is actually likely to be heading to. So if you like, it could be 12, it could be 15, it could be 8. You know, at the end of the day, you really have to accept what the market is giving you. Getting back to the Renko, if there are Renko charts, because I've had this question asked, there are Renko charts out there which do have wicks. I don't, as far as I'm concerned, a Renko chart does not have wicks. If you are using that Renko chart with our indicators, they may work, they may not. You can try them. As far as we're concerned, our indicators work perfectly well with the Renko charts that are available on NinjaTrader and on MT45, and now we are going to be also developing them for TradeStation. But any other chart that is, you know, called a Renko but doesn't look like this, by all means try them. If you're happy